Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. It is August 18th, and I'm joined by the everyday guy, Doug Big Hair DeRosa, and our research director, Nick Mancini, who spends. The heck was that?
Train? Train going to your place?
That was a Caribbean party bus that just drove by. I'm all off now. Today we're gonna hit up some news, some regulatory news, a couple of exchange news. Actually, two regulatory, two exchange. It's we're gonna discuss it because it seems like this is a daily occurrence all the time now. In the not up only world, and as I personally believe, we're going to feel the impact in crypto from regulatory authorities, not market conditions. So we'll hit those, but first we'll take a view of the macro markets for everybody. Here we got $1.1 trillion market cap, just down a half a point in the last 24 hours. We got Bitcoin at 23,293, off its highs from a few days ago and such, which we were all getting used to. And it is sitting at a bullish sentiment for the first time in quite some time, 63 out of 100. So excited about that. We'll see what goes on. That's a daily sentiment too. So Ethereum price is 1864, up 3/4 of a point in the last day. And it's still pretty much even keeled neutral, 49 out of 100. Now, the hottest on Twitter over the last 24 hours, we got Zen Horizon leading the way, up 551% in social action, but down 3.25 for price. If everybody looks at number 3, that would be CHZ Chili's. Social action up 213%. Prices increased 0.35%. And I'm going to hit that. I'm going to hit the Chili's chart real quick after this because I just want to bring some things together for you guys who've been watching us. Cardano down 2.35% in price, but a lot of activity on the social. KNC, Kyber Networks, up 7.8% in price and 147 on the socials. I always liked KNC. We got our top gainers, BTU, at 16.96%. It's been a little, usually we see a little more action on the top action, but it seems to be down a little for today. KNC reaching 3 on that chart. On the bullish coins, ADA is completely flip-flopped from a daily sentiment perspective. We at the beginning of the week, we had it as the most bearish coin by daily sentiment, and now it is the highest bullish sentiment coin with a score of 93. So go Charles and Cardano. We got Grin on the list there, the privacy coin. We got KNC on this list as well, rounding out the top 5 with a score of 80. On the most bearish coins, KNC just got bumped up to 4 while we were talking. Nice. On the bearish coins, we have Keep with a score of 21 as the most worst daily sentiment. Second is Sell at 25. Look at that price, 289. That's about $1 lower than what it hit at its high with this hashtag sell short squeeze movement that's been going on. And then rounding out that list, we got FTM of a score of 30. So the scores are pretty low. We'll see how those coins do. On the 1 hour chart, we have as I was discussing with Nick earlier, he had mentioned ETH is keeping its own. It is keeping its own right now. We got a lot of range-bound action on the blue chips going on. But as you can see from this chart, there is nothing in the 1 hour that is shocking or surprising. Most just slightly down the red right now, but they were green on the for the better part of the morning. So we had some good price action earlier on. Now going back to Chili's real quick.
Nice. I was gonna say we gotta give Dougie Fresh some props on the Chili's.
That's a team effort.
Let's bring Dougie on screen here.
That's the red hot chili peppers right there.
There's no Duggan team, Nick. Remember that.
So. There is no Duggan team. Now, if any of you If any of you get our newsletter, and if you don't get our newsletter, I don't know why you don't. It's free, and I'm posting it in the chat right now and pinning it to the top for you folks to sign up to. This is a Chili's chart. Doug every Thursday pretty much supervises. I'm not gonna call him out and say that he's directly in charge, because I don't want that responsibility on his shoulders.
Doug's a TTC puppet master. He's the one ordering Alex and I around behind the scenes that you guys don't see.
Exactly.
How about this? We focus on all three areas where people can make money, right? So short-term trades, intermediate, and longer term. So Nick is obviously highly, with Alex on this program, highly specialized in short-term trades, medium term and crypto, which is only maybe 3 months, which that's not really that long. It's really more of a lifetime is 3 months in crypto. But this was more of a medium to long-term play, I guess. And it just made sense going into the World Cup. You have some tailwinds. And today they announced 2.5 million tickets have been sold for the World Cup. So it just makes sense. It's a really widely large event. It crushes anything else in the world, like the Super Bowl or Indy 500, and just seemed like the tailwind would be there. And they're making a lot of noise in the space with fan engagement and fan tokens. So it just went up before I thought it would. I thought it wouldn't really do anything.
It also seems to have sparked a rally of quote unquote like sports coins or like kind of collectibles coins and stuff. So like there's been a couple of obviously scammy ones that are popping up too, but that whole sector has been ripping.
Did you see the football coins, like Barcelona coins and all that? I actually had a chart. I wanted to bring it up for the show because their performance of those coins has gone up, and with it, the tide with Chili's as well, because Chili's is so based into that sports world, as Doug was saying. But when we sent this pick out Thursday, maybe 2 Thursdays ago, I think 3 Thursdays ago.
It was 2 weeks ago.
It was 3 Thursdays. In that time, it's up 70%, and in the last 30 days, 87% total. So, Doug. Big round of applause to Doug. This is his winner for the year. Don't open any more emails from us.
They're all going to be duds. This does make the point, though, that there is, like Nick says, there's always alpha to find and profits to be found in this market. So, again, we're in a downtrending market since literally last November, yet you could have found literally 100% winner. And the downside there was kind of clearly defined. I think it was maybe to 5 cents you were risking, and your upside's unlimited. So sometimes you have to look at that. What is your downside? What am I risking for the upside? Right now, it's been a 3-to-1 bet, and that's a good win, right? So, from here, that's what we try to do. We try to give winners to everybody. So,
yeah, smash that like for Doug. Thank you, folks. Really appreciate it. If Chili's ever decides to go down, we're never going to show it on the air again.
No. Especially if they get rid of 2-for-1 beers every day.
We're going to head on over to Nick, who's going to break apart the crypto charts for us, the blue chips, Ethereum and BTC, as well as talk about the S&P 500 a little. So, Nick, you ready? I'm going to hand it over to you, bud. Oh.
Nick, are you on mute?
You're on mute, Nick. You pulled an Alex.
Apologies there. We started the new TikTok, so I wanted to make sure that as I'm checking stats that we don't have any unwanted interruptions. But looking at from the macro perspective, the two big data points I think from traditional market, which obviously bleeds into crypto, and then obviously crypto, is jobless claims. So if you read the newsletter, you watch our shows, we were looking at this number. It was technically a beat, which if you actually go ahead and look at the S&P 500, this is when the news dropped right around here. So we've only fallen after the drop and become volatile. So it's still more or less even since the news came, but clearly the market was, thinking it was bearish, but taking it more or less neutral. To us, this likely means that the 75 basis point hike number becomes a little bit more real, although it's obviously not real yet. This is, interpretation. So it does seem that, based on the Fed's mandate of, both inflation and unemployment, they'd like to increase unemployment so that demand softens, so that supply can be alleviated. Basically, if jobless claims are not going up, the unemployment rate is also not really going anywhere. So that's not part of the Fed's goals, meaning they may have to tighten and take more action. So that's kind of the interpretation of that. But obviously, there's a lot more data in between, and clearly the market's kind of shrugging this off. Although we have been getting a few more comments from Fed governors in relation to a favorable 75-point basis hike. So we'll have to see how that fleshes out. Again, our kind of magic number has been a majority of the Fed governors publicly saying that may be enough to really tip the markets in either direction. The other piece of news is the CME is going to launch Ether options on September 12th. They've had Bitcoin options for quite some time. If you remember, famously, the options started at the top of the 2018 top or 2017 top, whatever you want to call it. It did bleed into January. So the fact that this is happening again near, a potential local top, right around when the merge is actually, supposed to be finalized. Very interesting for potentially the bears who are going to use that as fodder to say that really good opportunity to short ETH. So something to watch for there. This is obviously another big news event in conjunction with the merge. So something important for ETH, which has been a very strong asset. So moving forward into, what's actually happening on the charts, does seem like we're trying to recover here from the S&P 500. It did look a lot more bearish this morning with this engulfing candle. Obviously, we've talked about this many times. You need a confirmation. A lot of our engulfings lately have actually been bucked, and it's very interesting to see. There's an example. Got another example. So engulfing is not the best candle to play, not very trustworthy. And if it can firmly break above, I'd say 42.85, then it's likely that we may see above 4,300 again. If that happens, then we would likely expect Bitcoin to try and make some recovery, although it has been quite weak. When we spoke yesterday, we were, right around the exact same price level. I mean, quite literally. I still have a feeling that, bearish price action is more likely than not. But if we continue to hold this level, if we cannot break through 23.2, then, trying to break above 23.6 becomes, very much desirable. But it does seem like 23.2 to 23.6 is going to be a bit of the range for Bitcoin until we bust up or down in either direction, which I think is going to have to deal with, the S&P 500. But the S&P 500 has been stronger than Bitcoin. Obviously, S&P is up on the day. Bitcoin is down. We know we've recognized that weakness. And then speaking of weakness, Ethereum has been a lot stronger than Bitcoin as of late. Has been equally range bound, but obviously a little bit better looking of a range. It's been breaking above, it's been making higher lows, as they say. It's coming up on resistance here. 1860, 1875 was strong resistance today. It's making a very similar formation to the S&P 500. So if the S&P 500 moves higher, I would expect, something like 1890 to potentially be next resistance. And then obviously if we move lower, we'd have to break below 1820 to then begin moving back down towards potentially 1800, potentially 1790, somewhere around there. I'm still of the camp that I think it makes more sense to see lower lows in the near future. But again, clearly the S&P 500 is trying to regain some strength. I find that fascinating because Fed governors do seem to be of the mindset that, we are going to continue with another higher hike, or not higher hike, but higher than expected in September. Obviously, we have a bunch of macro overhang. But, given the fact that we still have about 6 more weeks to the next FOMC meeting, you can see how there is a scenario where the S&P 500, moves above the 1-day or the 200-day moving average and attacks that higher POC or the higher trend, which they both kind of coincide with each other. But you can see a scenario where potentially 4,400, potentially 4,350 are both in play if this level holds. As you can see, we've talked about tweezers a lot. Bit of a tweezer formation forming on the daily for S&P 500 futures. So something interesting to look for there for the bulls and the bears. Right now, really tough area to place a trade if you're not. Clearly, the goal so far has been short resistance and long that support level. So, breakout traders are obviously going to look for a breakout in either direction. Else you're just range bound trading, 23.6, 23.2, and of course, trading ETH to the upside, but mainly trading in this $1,800 range as well. So nothing clear. Sentiment is a bit bullish. Well, that's mana. Sentiment's a bit, trying to push bullish on the daily, very neutral. It's a lot of variance. And then when we go to hourly, we were bearish for very much most of the morning, had a few poke outs, and clearly the bulls are trying to win. So we're very much in what I would consider to be a 50-50 area. The only way you would really want to trade or play a strong trade is a breakout, else you're just trading the range bound, nonsense, which could be good trading, but it can also be boring and a little bit stressful. Whereas breakout traders are probably maybe a little bit less stressed, but it's going to take longer to play out.
Nick, I have a question, which is it's a comment first and then a question. So I read today that net short positions on the S&P futures are hit a record, all-time record, 107 billion this week. So that's 4 straight weeks in a row. So my question, in the crypto markets, are we seeing the same action where a lot of people are net short, which is actually could be a bullish thing, obviously, if they have to cover. But do you have any data? Sorry to put you on the spot, but just wondering what is out there in those markets. Are people doing the same?
So I can pull up. Let's give me 1 second to get these charts ready.
Because it goes into what we've been talking about, that the smart money comes off the beach in 2 weeks, and the smart money really doesn't like the whole
money comes off the beach.
The dumb money's here today talking. No, but they say the smart money's on the Hamptons for the summer, and they're in the south of France, with their band display.
Let me show you what happens when the smart money comes off the beach.
Oh God,
that's what the chart looks like. Okay. But no, I'm just wondering what we're setting ourselves up for in the fall.
Yeah, so the data that I have immediate access to is not going to be very helpful visually, because I typically do not. I watch open interest and CVD, but I typically don't watch longs versus shorts, because I think that that's a false narrative to look into unless you're like really believing that there's a short squeeze. Which, if there are heavy shorts, then you would try and play the squeeze. GameStop, BlackBerry, etc. are great examples, but open interest I think is a much better example, because you'll actually see when reversals were like open interest. You can chart very much in a range, because you'll see once it starts to get to one place, then if it's going in a long direction, then shorts, then it's likely a good short scenario, and then if open interest dies, then it's a good long scenario, and you can track these patterns back and forth. We have seen obviously shorts pick up at this level, but we've actually seen a pretty good intelligent play for leverage in the crypto space from what I can see. It's like no one is overextending themselves so much, and it's actually been relatively predictable to track OI, because it's a lot of FTX, it's a lot of Coinbase, it's a lot of Binance. So you can kind of see where guys are and gals, of course, are prepping exactly where they want things to move. But in terms of longs versus shorts, yes, there are more shorts at resistance than there are longs, but nothing egregious. And we haven't seen OI levels that I would say are quote unquote worrisome in relation to the overall market. Like blow off top, or like 60K Bitcoin is when OI got worrisome. I think that probably should have been a better signal to us than, maybe I think we were a little bit more euphoric than we needed to be back then, but you live and you learn. So, and in this example, yes, there are more shorts than longs currently, but OI is not egregious. And therefore I don't think that we're ready for some sort of extreme washout. But obviously if, looking at price action, like what we saw overnight on Bitcoin for the past 2 nights is, a lot of volatility to wash out potentially long stops overnight to clear out open interest heading into the day, which creates a more panicky trading and things like that in the mornings, and can set people off sides and all that fun stuff too. So, the moral of the story is, be careful with your open interest at these levels because of the volatility, and the fact that there's likely less players playing with more money is typically what happens at this stage in the cycle. And so, it's more desirable to wash people out and create, wider ranges, wider variance, more volatility and kind of scare off the populace. So
very cool. Thank you for that. That was a good education for everybody watching.
Yep.
All right, folks, let's jump into some news that's going on. Two regulatory, two company issues. The first one is South Korea to block KuCoin. Well, a total of 16 exchanges in total. So that's about, I mean, look at those names: KuCoin, Poloniex. This is going to be rough. South Korean people love their crypto. South Korea has been going through regulatory transition the last couple of years, trying to be very much like Singapore and much of what I wish we had. They don't blanket regulation, but this seems to be a big deal. So 16 crypto exchanges are going to be banned for not being registered. We'll see how many, or if they can, with the amount of time, some of these will go. South Koreans love their crypto. It's a thriving marketplace over there. So I hope these exchanges can pull through. Last month we brought you news that the FCA over in London was proposing to do a limit on the amount of crypto people can buy, retail users. Ontario just imposed 30,000 Canadian dollars as an annual limit on altcoin buys. Now, I don't know about you, but imagine if someone said to Doug, he can only buy $30,000 of Dogecoin in 1 year. That's not going to fly. His crap coin addiction is way higher than that. Nick, I mean, he trades crap coins like he's peddling baseball caps outside Yankee Stadium on any given Saturday. So, guys, what's the deal? The South Korea non-registration thing, I can wrap my head around. A government coming in and saying, guys, you can only spend $30,000 a year on altcoins seems really egregious.
it's absurd. I mean, it's literally just like, I mean, it's if there's ever been a reason to continue to forward the narrative for decentralization, this is it. I know we've had our talks about, what decentralization actually means and isn't crypto, and we still have a ways to go, but there are still many apps that, live and breathe that narrative meaningfully. And if I'm, why would I continue to use the full centralized set of tools and resources in front of me if they're going to continue to impose these things? It's funny. Is Deutsche Bank and HSBC still doing business in these countries? Do I have a $30,000 limit on, things that I can do with those banks in reference to my finances? If not, then why are we having this conversation? Because if the playing field was equal and they said, okay, based on XYZ in the past, these people are going to be in the same boat as this altcoin situation, I'd say, okay, at least you're making sense. At least there's logic to your reasoning, and there's a process flow for what's happening. The fact that, there's certain people get treated better than others just because it's the factor of you're a retailer, you're an idiot, and you're not smart enough to think for yourself. Well, you thought that I was smart enough to make a bank account with someone who you approved regulatory, through regulatory offerings, and I got screwed by them too. So when am I smart and when am I dumb? And why are you imposing these rules on me?
There's days where we trade more than $30,000 in altcoins, meaning we have to buy more than.
That's literally every day. Every day we do that.
What is that?
There's no way I'm keeping over 10 mil volume on Didex, not doing at least 50K a day.
Exactly.
What did that news break, Alex? Was that
yesterday? I think.
Yes. Okay. Because there was news of that Canadian pension fund that's writing off 150 million.
That's on the Celsius.
On the Celsius side. I'm just wondering if that is part and parcel of that, because they're trying to protect retail, obviously, here. But because such a large institution took a hit, they're just saying, all righty, let's just protect everybody. I'm just wondering if that's a counter effect of that. So
it's just going, no, it's just it's regulators thinking that they're protecting the regular, the everyday retail investors when, that was the excuse given on the reason why there's no spot Bitcoin ETF, right? So you look at how many times has the Dow been so volatile over the last 12 months that it swung so it whipsawed worse than BTC price, and they said, hey, Bitcoin's too volatile. We're not doing a spot ETF in the US. We want to protect everybody. You know something? Let us win and fall on our own. That's what I say. It's great to have regulation. It's great to have rules and to have those guardrails to protect investors, but that should be against like bad actors and stuff. Don't protect them against market conditions. How about you take that money and you educate people on market? I wish the government would open up a YouTube channel and start educating people every day on market conditions. That's my 2 cents.
No, I mean, I agree with you. It's like it frustrates me to continue to have these conversations because as someone who worked for a bank who received one of the largest fines ever in history, I mean, I know these things firsthand, and I know how people react on the inside as well, and they literally think that we're idiots. It's not even a joke. They legitimately think we're idiots, and so screw them.
Going back to that pension fund, though, it does show that even the largest institutions had confidence in these counterparties in the ecosystem, right? Because again, that's pensions of firefighters and police, and that's a large investment into crypto, 150 million. A lot of them before were 25.
What we love about Doug. Doug just walks into the room, inserts his own news into the show.
No, I'm just saying that's part and parcel with this. The Canadian authorities are pissed off.
No, you're absolutely right. I think they do go hand in hand from an optics point of view. A lot of Canadians participating in Cell, and is to your point, a pension fund, right? That's somebody's retirement. Hold on a second. Let me take care of Bianca. That's somebody's retirement money that got blown down the tubes. Yeah. So, and there's a lot of Canadian people who invested in.
Yeah, I think you can block Bianca, Alex. I think she thinks we need investing help.
Yeah. Well.
So going back to what you're saying, and same with Voyager being on TSX or whatnot, there's a lot of Canadians that I think were harmed in the last go round of fallouts based on crypto and the government stepping in, but I don't know that they're stepping in with the correct stuff. I mean, Canadian government is operating just like the U.S. regulators would, I suppose. Sometimes they're not. I don't think they're picking the right tool out of their tool belt. So moving on, now we go to companies. This is a big one, actually, guys. This is Genesis. Now, Genesis is a crypto broker and lender, in New York. It is a well-known blue chip institutional counterparty. And it's been headed by Michael Morrow for the longest time. Okay, he's very highly regarded on the street. They're slashing 20% of their workforce, and Michael Morrow is leaving the company. This is a big transition for a highly regarded, let's call it kind of like a Morgan Stanley, Goldman Sachs type of viewed upon company in crypto. So this is a big deal. Now, why are they doing it? Well, Genesis also had the largest exposure to 3 Arrows Capital when it came to those dubious loans that we now realize were many of them were collateralized multiple times by the same collateral, according to Sam Bankman-Fried in an article that broke last week. But they have a $1.2 billion claim. And I think at that point when, you have a hole like that in your exposure and your risk management sheet, whoever the stakeholders are at Genesis, in order to keep their name and continue to be a powerhouse in crypto, I think probably one had to remove the CEO for an optics point of view, lay accountability to whom it should, which is him. The CEO is is the last straw on the ladder, and 20% is probably to reduce cost expenses moving forward off that loan loss. So, I mean, Doug, big hit on the Wall Street of crypto here with the Genesis news.
Well, they were backstopped by DCG, right? Digital Currency Group, and they actually forgave the loan, I guess, because Genesis is an entity of DCG. So I'm sure Morrow thought that his job was safe, but heads will roll, right? And somebody had to take the fall for this, right? It was just
I mean, if your company is taking that big of a loss, because and we all know how this world works. Like, nobody's making a loan that big without the CEO of the firm knowing about it. And I'm sure he was directly involved in the deal. If he wasn't with a loan that big, I would also be shocked. So clearly there is someone who's at fault here. And if their risk controllers are not also canned, I would be shocked as well, because they shouldn't be able to ever get a job at risk ever again, unless their dad, runs, the New York Stock Exchange or something. But it makes complete sense exactly what happened because of their loan practices. So it's unfortunate and it sucks, but I mean, it's what has to happen.
I'm just amazed that 3 hours actually got work done. Did they just put in loan requests every day? I mean, seriously, all they did was get loans.
They didn't have to do much work to get the loans. It was, hey, can I have 200 million? And they were like, well, when do you need it? And they're like, in an hour. And they're like, okay. So, I mean, then you have an hour to go, on your yacht before you have to start trading again.
Let me tell you something. Did you guys, in last week's New Yorker article, I know you all read it, but they spoke about the boat. I'm a boat guy. I love boats. Man, this wasn't just a boat. This wasn't even just a yacht. This was a 150-foot San Lorenzo, brand new out of the factory in Italy. I mean, what the heck? You're right, Doug. They just took out loans all day.
Yeah, and they were good at it.
Oh my God. All right, let's move on to the wowzer of the show, which is what the thumbnail was about. And that is crypto.com. Now, here's something. Listen, this came out via The Verge. Now, I never hear anything bad about The Verge at all, but I just want to say this is crazy. Crypto.com laid off 260 employees. You may, folks, you may know them from taking out the Staples Arena and calling it the Crypto.com Arena for an $800 million 20-year deal. Okay. Crypto.com logos are located on Formula One cars on any given Sunday if you watch Formula One, and that's a expensive sport to put a sticker on. Oh, Doug, aren't they in that fighting thing, the MMA or something on the mat?
I believe they are, yeah. They're all over the place.
They're everywhere. There is actually not a street sign they didn't slap their sticker on, And so we always look back, especially with what's happened the last couple months. And we always look back and we always say, why didn't I see the signs? Why didn't I see the signs of something happening? It was the writing was on the wall. It was completely obvious. We all missed it. Well, I'm not saying anything. I'm not creating FUD or anything like that. I'm just showing an article that seems to be a little off. And I want people to come to their own decisions, particularly, if you do business with them. But what appears to have happened is they laid off 260 employees. Okay, not a big deal. Everybody's tightening the reins. Some jobs have to go. Here's what happened, though. An employee said we were assured the layoffs would impact 5%, 260 employees. Now, a source within the company goes on to say, but 1,300 staff were let go. 1,300. Now, if you take the math, you got 260 employees, that equals 5%. 1,300, that equals a lot more than 5%. I'm not good at math. Let me tell you something. That's got to be like 50%.
Yeah.
But if you are a company like this who through the up-only times spent billions of dollars in marketing everywhere, and now you're slashing 50% of your force, you got to think about that a little, okay? Got to think about that. Not only that, there was, I hope I highlighted it. Oh, here, a town meeting. A town meeting took place on August 10th, okay? In the Q&A section, the CEO was asked about the exact numbers of layoffs. He replied, "We have no obligation to tell you anything." Okay. I'm just saying, if a couple red flags here. I'm opening it up to comments. Crypto.com, big exchange, a lot of marketing money in the last bull run. Apparently 50% of their force has been staff has been let go, and the CEO in a town hall meeting when asked says, "We don't have to tell you anything."
My concern for exchanges in general is that they use the commission side as a loss leader to bring in other business that drives revenue, right? So Interactive Brokers, let's say, has really cheap commissions because they make it on margin and other areas, right? So obviously these exchanges knew that there was going to be fee compression in crypto. A lot of the spreads just didn't have transparency, and going forward, that was going to come down. But now if they're losing these other types of products that they were making money on because they were such a disaster, kind of where does it leave them in the future? I would think that they're going to either have to come up with some really new creative products, which whatever that is, I'm not sure, or there's going to have to be like a mechanism where it shows more transparency into exchanges, almost like a standard where it shows where their risk lies, so people have a comfort level when they put their money onto exchange. Otherwise, a lot of them are just in a really difficult place to drive revenue going forward. And if you can't drive revenue, then you got to reduce headcount, and that's what they're doing, right? So right now it's a cocktail that doesn't really work for a lot of these exchanges. So
I like that, a cocktail.
Thank you.
I love cocktails.
Yeah, you say cocktail, Alex is interested.
He's thinking out of Tom Cruise. Are you thinking of Tom Cruise, the movie, when he was flipping the bottles? Yeah.
I told somebody the other day my go-to plan if the world falls apart is to put up a tiki hut in the beach in front of my house. I'll do that for the rest of my life.
The one thing that, like, for this is, like, you see everybody who's best judge of character when they're at their best and when they're at their worst. So when Crypto.com was at their best, they were spending money, supporting the industry, doing what they can, et cetera, et cetera. And when they're at their worst, their CEO is basically giving everybody the middle finger and saying, we're just going to do business as we do business. Now, on one hand, positive, and then on the other hand, negative. So if they're going to sit there and say, we're going to be the happiest people in the world when everything's good, and we're going to be the worst when things are bad, it's probably not the best people that you want to, ride or die with, meaning, use as your primary service for something that is both, important, to your life, i.e. finances, and B, from a risk perspective of making money or turning money into more money. So if they're acting like this, then there's probably not good reason to fully trust them moving forward. And that's just on the basis of anybody is giving you a middle finger when they're asking questions, typically has something to hide. If you don't have anything to hide, I understand there's a whole perspective of, I don't want my car searched. I don't want you in my space. That's fine. But if someone's asking you that materially has something to do with their finances and you're managing their finances, and they just want a simple question of, is everything going to be okay? And you either cannot answer that or will not answer that. That's a huge cause for concern in my book. And if the Coinbase CEO was doing the same thing, I'd say it. If Steve was doing the same thing, I'd say it about him. I'd say this about anybody. If you simply cannot answer questions that have to deal with somebody's finances transparently, there is no reason to trust you with said finances. And I think that's just where the buck stops.
100%. I totally agree. And especially when you're a powerhouse in an industry, this isn't a small exchange. This is somebody who has a lot of retail money, locked up in there. So transparency is a key. Now, I want to go back real quick to something that Doug had mentioned, because this is important, folks. And I want you to think about this, and you may not be aware, but he spoke about fee compression. Now, when it comes to brokerages, fee compression, it's the race to zero. That's the way it is on Wall Street all the time. Next thing you know, people are saying we offer commission-free trading and all this stuff, or we low transaction fees and whatnot. You're not making, if you're making 2 basis points on a trade, that trade has to be like $5 trillion for you to just get 1 week's paycheck. If you do the math, it's ridiculous. Where do they make the money? They make the money. Wall Street makes the money in TradFi and crypto on the borrows. What are the borrows? The borrows are the lending. So we just went through a whole debacle with 3AC and a bunch of counterparties with loans, okay? Again, I'm not spreading any foot. I just want to put this out here so people can think about it and come to their own choice. But if you're laying off half of your employees, and it's because, and you're saying your front office fee compressions are down, maybe that's because your large spreads in the rear on the borrows have dried up, or maybe there's a large portion missing. And I say this because I do not believe that we know all the exposure to 3AC, and we will not know all the exposure to 3AC. Because if you are a counterparty on the street and you have, your reputation is on the line, you have a lot of money in play, from sports arenas to, retail customer numbers. Let me ask you this. You're not public. Would you disclose that you just had a massive loss to 3AC? No, you wouldn't. We're not going to know everybody who's lost hundreds of millions, possibly billions of dollars here. So think about it. Just read between the tea leaves. Big company in crypto, 50% of their employees gone. That's all I'm saying. Leave it at that. Guys, thank you for joining us. It's Thursday. We're almost to the weekend. We will be here again tomorrow. If you didn't catch Nick's Daily, it's the best 15 minutes you can do over on the Trade the Chain YouTube channel. Our free newsletter with commentary and our Thursday coin picks are they're pinned to the top of the live chat. Sorry. Those have our coins on the move. Where we discuss, again, a big shout out for Chili's from Doug 3 weeks ago, up 87% for the trailing 30 days. So really good stuff. Guys, smash the like on the way out, please. And we will see you tomorrow. Thank you very much.